Hey everyone, Broadcom reported quarterly financial results that sent the stock price higher, more than 16% following the release. I'll review those financial figures and I'll update my buy recommendation for Broadcom stock. Coming into the quarter, I had Broadcom stock rated as a buy, but I also told investors not to buy before earnings. So I want to clarify those recommendations, update the recommendation on Broadcom stock, and let you know if I think the stock is a buy, hold, or sell following these earnings results. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so about a week ago, I released this video asking, should you buy Broadcom stock before June 12? And that was meant to say, should you buy it before the earnings release? And in the video, I talked about how excellent Broadcom's business is, strong profit margin, excellent revenue growth. The company knows what it's doing, all of which are reasons why I had the stock recommended as a buy. But I also told investors in this video not to buy the stock right before earnings. And my reasoning for that was because stocks are volatile in the day after the earnings release, in the moments before and after the earnings release. And I didn't want to have investors buy or sell in a moment with extra volatility. It's already risky making investments in the stock market. Investing in those days is even more risky. So you're taking on more volatility investing before an earnings release, because then the stock price moves largely following the announcement, as you're noticing here. So this is one of the situations where the price moved violently higher, right? A big jump higher following the earnings release. The stock price is up 16% in the moments after. But there are situations where it goes in the opposite direction. So it's extra risk because there's a lot of information embedded into the valuation going into the earnings release. And then when the earnings come out, the price adjusts to the new information. That's why I usually suggest waiting until after the earnings release come out to digest the new information and then make an investment decision after. Sure, you'll miss out on some of these huge price gains, but you'll also miss out on some of the downside events as well. So you basically lowered your risk and you lowered the potential reward. But I think it's worthwhile in most cases. There are rare cases where I do still recommend buying before the earnings release. And those are cases where I feel the stock price heading into the earnings release is so undervalued that there's enough margin of safety to justify a buy recommendation. I did not feel that way with Broadcom. I did not feel Broadcom stock was undervalued enough heading into the earnings release. And you can see Broadcom stock, when I'm looking at it now on a forward price to earnings ratio, it's near the highest it's been going back to July of 2021. And so that's why I didn't feel the stock was undervalued enough to recommend before the earnings release. But let's take a look at the results and let's see if it's a buy after the earnings release. So Broadcom reporting $12.487 billion in revenue, which was up 43% from the same quarter the prior year. But remember, these results include revenue from VMware, which it recently acquired, which were not included in its results in the same quarter last year. So it makes its revenue growth look better than it was organically. Organic revenue growth was still solid, but not as solid as including VMware, which I'll share with you a little bit later. GAAP net income of $2.121 billion was solid net profit margin. When you divide net income by revenue, that will give you the net profit margin. Cash flow from operations is a more informative metric to consider in this particular report because of the disruptions from including VMware's results with Broadcom's results in the current quarter. Cash flow from operations, $4.58 billion in the quarter divided by $12.487 billion will give you a solid cash flow from operations to sales metric. Fiscal 2024 annual revenue guidance was upgraded to $51 billion. And these will include VMware results, and that would be an increase of 42% from the same quarter the prior year. For the same fiscal year in 2023. Now, companies saying that revenue from their AI products was a record $3.1 billion during the quarter, and that caused them to raise their 2024 guidance to $51 billion. and adjusted EBITDA of 61% of revenue. Those are very solid profit margins. Broadcom is one of the most profitable businesses in the world in terms of operating profit margin, and it looks like those trends will continue for Broadcom for the rest of 2024. Now, if you exclude the results from VMware, revenue was still up a solid 12% year over year. This is excluding the impacts from VMware. Of course, you're probably reading headlines already. Broadcom announcing a stock split. This was one a lot of investors were speculating would do a stock split because the stock price was getting expensive. And so today they are announcing a 10-for-1 forward stock split, just like NVIDIA. NVIDIA also did a 10-for-1 stock split to make ownership of Broadcom stock more accessible to investors and employees. So looking at the details of the stock split, stockholders of record as of the close of market on July 11 will receive additional 9 shares of common stock for each share held after the close of market on July 12. At market open on July 15, trading is expected to commence on a split adjusted basis. So if you want to participate in the stock split, you'll have to buy your shares before the stock closes trading on July 11, before the close of market on July 11. And then the stock will trade on a split adjusted basis on July 15. So if you want to get the lower priced shares, you'll be able to get those on July 15 when trading opens. So, do I think Broadcom stock is a buy? It's now trading at a forward price to earnings of 25.85, near the highest it's been in the last 3 years, according to the forward price to earnings metric. But also the company's profit prospects are better than expected and better than they were going into the report. So if I had to say if I thought the stock is a buy, hold, or a sell, I would say Broadcom stock is a borderline buy. Borderline buy because the revenue growth, profit margin are excellent, but also the stock is trading at the highest valuation it's traded for in the last 3 years. So a bit of a give and take there for Broadcom. Yes, excellent profit margins, excellent business, but the valuation already accounts for most or a majority of those excellent prospects going forward. And if you've been following my channel, you know my views of a stock split and how it'll impact my opinion on the investment. And you'll know that a stock split does not change how I view a stock one way or another. It has no impact on my valuation of a stock. It's just taking one slice of pizza and splitting it into 10 slices. I don't see that as having any material impact on the company's revenue, on its profit, on its cash flow. Sure, it'll make the shares more affordable to a broader population, but that's not going to change the company's revenue, its profits, or its cash flow, which is the thing that I consider when I'm making an investment decision. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.